Could you put your money into another vehicle to invest and save? Absolutely, right? This is not the be all end all. This is for people that are focused on saving. It's for people who want to be able to borrow against their policy by using it as collateral. And it's for people who definitely want to create long term wealth.
Hi everyone, welcome to my channel. My name is Reni. If you're new here, welcome. And if you're a returning subscriber, welcome back. So if you are new here, let me introduce myself. My name is Reni and I teach people how to build wealth, to invest, to save, but also to spend money on things that you value. So if that content interests you, feel free to hit that like button on this video and subscribe to my channel so you can get more knowledge right into your inbox. So today we are going to be talking about life insurance. And life insurance is something that a lot of us have heard about. We hear about like scams relating to life insurance. We hear about MLMs related to life insurance, but many of us don't even know what life insurance is or why we need it. If you have a mortgage, if you have dependents like children or a spouse, if you do not want to leave a burden if you were to pass away today, you need life insurance. And in this video, we are going to deep dive into why you need it. So today I have Nicole Simons back on the channel. I'm so excited to have her. A lot of you really liked her in my last video, so of course we had to bring her back for this one. Nicole is a licensed insurance broker and part owner of CPN Financial Services Limited. She's actually the N in CPN, and it is a family-owned business, which I really love. It's rare to see Black-owned family businesses, and this business has been around for over 30 years. So they have a financial services company. If you are very passionate about using Black-owned services, make sure to reach out to Nicole. Hi, Nicole. How are you?
Not too bad, Reni. How's it going?
I'm good. Thank you so much for being here again. Welcome back.
Yes, thank you. I'm so happy to be back. So happy to connect with you and, of course, your lovely followers. So this is great. I'm excited.
I got a lot of questions from my audience about life insurance. So some of them haven't seen part one. So if you're watching right now and you have not seen part one, I would recommend that you watch it first. We'll go over the basics of life insurance, but we will not cover all the concepts that we covered in part one. So please go and watch it first. So the first thing that I want to ask you was, what is life insurance once again, and why do we need it?
Yeah, so life insurance, is the foundation of any sound financial plan. It protects your loved ones and your family, against the unexpected by giving your loved ones a lump sum of money known as a death benefit in exchange for premiums that can be paid monthly or annually. So essentially, life insurance pays a lump sum out to your loved ones to help take care of any funeral costs or final expenses if you were to pass away unexpectedly.
So I really want to drive home the point to my audience that life insurance is a must, especially if you have dependents. So I wanted to know, how can not having life insurance affect the ones that you've left behind? Are there any horror stories that you've heard of, or things that typically happen when you don't have life insurance?
Yeah, great question. Everybody goes through an emotional roller coaster when they lose someone that they love, and not having a life insurance policy just makes things that much more difficult, right? Grief, sadness, depression, those are all emotions that we naturally go through when we lose somebody. However, fear and anxiety due to financial stress can also be tossed in the mix when somebody is, or should I say, when somebody dies financially unprepared, right?
Mm.
So there is extra emotional burden that is taxed onto the family by not having a life insurance policy. So if you loved your loved ones and you don't want them to go through that extra stress, it's very, very ideal for you to have a policy.
Mhm.
Your children obviously, will totally be distraught if you're no longer here. Your spouse, parents, these are all people that, you love and will be totally affected, but you don't want that extra layer of stress on anybody. And, realistically, when you don't have a life insurance policy, that's you willfully making a decision to have somebody else pay for your final expenses. It's kind
Yeah.
of selfish, if you ask me. So, to avoid all that, please look into getting something. If you don't want anybody else going through that extra layer of stress, look into getting a policy to mitigate that risk.
Okay, cool. So now that we know that we need life insurance, what would be some of the different types of policies that are available? I've heard of like whole life, permanent, term. Like, what are the different types of policies that are available for us?
Yep. So when it comes to life insurance, there's two main types of coverage. There's term insurance and there's permanent insurance. So, to start, term insurance essentially is coverage that you can get for a certain duration of time. So, you can get a 10-year term, 20-year term, even up to a 40-year term, depending on your age. And what that means is that if you pass away during that term, the life insurance company will pay your beneficiaries the death benefit, right?
Okay.
However, if you do not pass away during that term, you have a few options. So when your term comes up for renewal, you can renew your policy for another 10, 20, 30 years, depending on what's in your contract. You can cancel the policy because maybe you no longer need it anymore. Maybe the financial obligations you are trying to protect are now gone, so no need for it anymore. Or the third option is you can convert your term policy to permanent, right? So there's three options, but essentially, term insurance, Reni, is great for people who want coverage for a certain period of time and might have some temporary needs they want to cover, like a mortgage, growing family, education costs for your children, line of credit, credit card debt, student loans. It's great for that because you're able to get a large amount of coverage for a pretty good price.
Hmm.
Okay, so that's how term works. Permanent coverage now is coverage that you can maintain for your entire life. So, unlike term coverage that expires, permanent coverage does not expire. Whether you pass away at age 50 or age 101, it's guaranteed to pay out because we have to die at some point. So it's great for people who want to make sure that their final expenses will be covered no matter what age. And it's also an excellent tool for people who want to create wealth to pass down to the next generation. Because when you have term coverage, you can still pass down wealth too. But remember, if you don't pass away during that term and you end up canceling, no wealth to be passed on.
No. Yeah.
When you have permanent coverage, remember it's guaranteed to pay out and you're paying for it for life. So if you want your child or your grandchild to have $1 million at your time of death, you can ensure that happens with a life insurance policy because it's guaranteed to pay that out at time of death. Okay.
Hmm.
So underneath the permanent umbrella, there's whole life coverage and universal life. So both of these coverages are permanent and both of them have the ability to provide you with something called cash value, which we'll talk a little bit more about in a second. But it's great for people who want coverage to last their entire life and have a benefit of using the cash value while they're alive as well.
Okay. Okay. So that was good. I think that would be a great breakdown. And maybe I'll make an Instagram post about that specifically because I think a lot of people would love to know the differences. Or you can go to Nicole's Instagram and I'm sure she has lots of great information about that. So so I guess we technically don't need to have life insurance until we die, but if you want to and you want to pass down wealth, then you have that option too with the permanent policies, if I understand that correctly.
Yeah, I mean, you need to have life insurance regardless,
Mhm.
to whether it's term or permanent to make sure your final expenses and loved ones are taken care of. But if you want to ensure that money will be passed down and you want to ensure that your final expenses will be taken care of, permanent is a great way to go because one could always argue that, Nicole, I can always just save money instead,
Yeah.
right? But remember, saving takes time. Right. And in order for you to save, you need to be present on this earth. And unfortunately, you or I do not have a crystal ball. So we
Hmm.
can't tell when it's going to be our time to go. So
Yeah.
that's why having life insurance in place now is so essential because neither one of us, we all know our birth date. We know when we got here. We don't know when we're going to leave. So
Hmm.
that being said, having a life insurance policy will ensure that when it is your time to go, that money is going to be there because you may not be here long enough to save for your final expenses. If your life
Hmm.
is cut short, that's it.
Yeah.
Right. So life insurance basically steps in to ensure that all the things that you wanted to do for your family, fund your child's Harvard education, make sure your wife has money to go to medical school or become a lawyer. All those things can still happen if you have a life insurance policy. So it's
Okay.
essential.
And I remember some people were coming at me at the other video and they were saying, "Oh, but yeah, I could just save as you said." So I think there may be certain situations where it may make sense to have a term policy. And correct me if I'm wrong, but say you had this whole life or you had this term policy, it was 30 years, you had it from age 25 to 55. Now you're 55, your kids are all grown, they're out of the house, your mortgage is paid off, you have a substantial savings. Maybe could that be a situation where you're like, okay, now I can I don't need life insurance anymore because all my expenses are paid off and my family will still be in a good place because I have XYZ saved away for them. Could that be a situation?
Yeah, I'm glad you mentioned that. So yeah, and one thing I would just to intertwine with what you're asking is that remember life insurance is something that needs to be revisited every 2 to 3 years, right?
Oh,
Because remember, when you first purchase your life insurance policy, you're in a specific financial state. But within the next 2 to 3 years, you could have kids. Maybe you
yeah.
didn't have kids before, and 2 to 3 years you have kids, or maybe you weren't married at first and now you're married. Or maybe you didn't own a home at first, but now you own 3 or 4 investment properties. So your
Yeah.
life is going to be constantly evolving financially, and you want to make sure your insurance policy keeps up with that. So it's not a one stop shop where you just get it and put it under a mattress and never look at it again. It needs to be revisited. But back to your question with this specific situation, yes, if this person now has kids that have flown the coop, no longer at home, they have substantial savings, the mortgage is now paid off, yeah, that might be a situation where they don't necessarily need life insurance because if they were to pass, their significant other does have somewhere to pull from to pay the final expenses, right? So in that case, maybe not. But you have to understand something too. A lot of times people don't want to use the money that they've worked so hard to save to pay
Yeah.
final expenses, right? Remember, even the rich have life insurance.
Yeah.
Rich people don't need life insurance, but they don't want to use their hard earned coins. They want to let that money sit and compound, and they want to use a life insurance company's money to pay final expenses and estate and tax costs instead. So,
Mhm.
I mean, to me, everyone should still have it regardless. But yes, if most of your financial, needs or burdens have evaporated, then there might be less likely a need for you to have coverage.
Okay. But it doesn't hurt. It never, I don't think it ever hurts to have it, right?
Exactly, exactly.
Okay.
That's how I feel.
So one thing I often see on TikTok, I spend a lot of my time on TikTok, and I often hear financial content creators and brokers and things like that saying that you can borrow money from your life insurance policy and pay it back. And it's very confusing to me. Honestly, I don't even know, I don't even understand it half the time. So could you please explain what this concept is? And is this for like the average person or is this for extremely rich people?
Yeah. So, I mean, this definitely would fall under the permanent category of life insurance. And this is something that can be done with whole life coverage. So, it's not just for the rich, although the wealthy and corporations have been using this strategy for years. It's a way that you can essentially be your own bank, right? So, let me explain a little bit more. So, we've all been trained to get our jobs, take our money, place our money within the bank for safekeeping, all while the bank then takes our money, invests it, lends it to other people, and sometimes gets up to a 29% rate of return while giving us peanuts, right? Like with our high interest savings account, right now rates are pretty good, but that's definitely temporary. Um, so yeah, we get next to nothing from the banks. They take our money, they move it around and do what they need to do. I even saw a statistic sometime last week that banks tend to make over 400% rate of return on the money that we've been
That's
taught to just give to them and let sit there, right? So, what
yeah.
if you could take that power back? What if there was a way that you could fund your own bank? So, using a participating whole life policy, you can actually be your own bank and have life insurance at the same time.
Mm.
So, how this strategy works is that the policy has to be set up a specific way, and there has to be a very large emphasis on accumulating the cash value portion. And that's done by you using your whole life policy as your basically your main savings, where within the first few years, you're going to put a lot of money into the policy. It's called overfunding. So, you're going to be paying money into the policy over and above the premium that you're required to pay. So for example, if your premium is $50 a month, you're going to be overpaying money on top of that 50 to create your own cash value. So
Mhm.
that money will sit into the policy, grow and compound at a steady rate of return, all while earning company dividends that grow the cash value and extend and increase your death benefit. So participating whole life insurance has tons of bells and whistles that, it's very intricate, but it's a great tool because when you have this type of policy, you can overfund it. And when you're ready, you can take that money out whenever you need it, or you can borrow against your policy and have that money be taken out that way instead. The key, or major key, should I say, with that strategy is that when you borrow against your whole life policy, you're not using your money. You're actually using the life insurance company's money. So the
Mm.
money that you've been putting in this whole entire time is still within that policy, growing and compounding year over year tax free, while you've now taken the life insurance company's money to pay down debt, buy an investment property, whatever you wish. The main thing is that you haven't stopped the compounding growth of your money. You see, because one of the biggest, hindrances I see with creating wealth is that people lose that compounding effect every time they deplete their savings to buy that new car or pay down debt, right? Once you save and you take action, buy a car, pay down debt, you're now back at zero. You're starting
Mhm.
that wealth building process all over again.
Mhm.
When you use this strategy and borrow against your policy, the compounding never stops. You're not
Okay.
starting at zero again because you've used the life insurance company's money to buy an income producing asset, pay down debt, all while your money sits in compounds tax free.
So the first question would be, when you say that we can get we can take out dividends, or we can, like, what does that, dividends of the life insurance company? Is that what it is, or where are the
Yeah.
dividends from?
Yeah. So specifically, not just any whole life, it has to be our participating whole life.
Okay.
Participating whole life policy owners are eligible to get company dividends. So the dividend essentially is something that gets paid into the policy based on how the company performs, right? Like all the money from policyholders are pooled into a participating whole life account. And out of that account, the company pays, death claims and expenses and all of that. But essentially, depending on how the company does for the year, they pay a dividend back to those policy owners.
Oh, okay.
So that dividend can be taken in many ways, but in this particular strategy, this dividend is paid to the policy owners and buy more life insurance coverage. So it increases your death benefit year over year. So
Hmm.
every year, your death benefit is growing and the cash value component is growing too with those dividends.
Okay. And then my other question with that would be, if I'm over contributing, so say my policy is 50, but I'm putting $100 every month into this policy, why wouldn't I just put it into a bank account? Like, is the interest rate much higher in this, or what is the reason why I would do this?
So remember, you're doing this because you're trying to be your own bank. You're not
Hmm.
wanting to put the money into the bank because, of
Hmm.
course, they use the money, they take it, do other stuff with it. You want to fund your own bank. So by placing the money into your whole life policy, you're having more control. In terms of rate of return, this money is not subjected to the market at all. The life insurance company pays pretty conservative rates of return. So anywhere maybe from 3, 4%. It's nothing that's going to shoot the lights out. The
Hmm.
whole point, though, is that by putting your extra money into the policy and letting it sit there, you're giving it the ability to compound and grow over time with the accumulation of the dividend growth as well. Right.
Okay.
So could you put your money into another vehicle to invest and save? Absolutely. Right. This is not the be all end all. This is for people that are focused on saving. It's for people who want to be able to borrow against their policy by using it as collateral. And it's
Mhm.
for people who definitely want to create long term wealth.
Okay. So the TikTok people are not, they're not scamming us or anything like that. They're just sharing another method of basically building wealth with using life insurance. But I guess many people just don't know about it. So it seems that it very wild when they when they
Yeah,
say,
yeah, it's definitely a mindset shift, right? This is
yeah.
not something that's talked about most of the time. It's one of those like if you know type of thing. And
Mhm.
it's actually a best kept secret because, like I said, wealthy people, even banks, own huge life insurance policies that they borrow against year over year all the time. It's just not information that the general average person, would know, right? So it's definitely not a scam. It's another strategy that people can use where they can borrow against their own policy to be their own bank. Because what I forgot to mention is there's no stipulation of when you need to pay it back. You see,
That's
when
what,
we get loans from the bank, we have to pay it back within a certain time period, or there's minimums we have to pay every month. None of that is the case with this whole life policy. When you take that loan out, you pay it back when you want, how much you want, whenever you wish. And if you don't pay it back, Reni, it just gets deducted from your death benefit. So let's
oh,
say you took a policy loan out for $30,000, and at that point in time, you didn't pay anything back yet. and suddenly you pass away, well, that 30K plus interest, because yes, I did forget to mention that the life insurance company will charge you an interest rate to borrow against it.
Mhm.
So the loan amount with the interest will be deducted from your death benefit.
So, but just building off of that, I've heard that we can invest through a life insurance policy as well. So, how would we invest through a life insurance policy?
So if you're interested in being more hands-on and want to invest within your policy, I would suggest looking at a universal life permanent policy. Universal life is a form of permanent coverage as well, and it's for people who want to be a little bit more hands-on and invest within the policy. So what this means is that similar to whole life, you are able to overfund, and along with your advisor, you can take a look at some of the portfolio of funds that are available to you based on the insurance company
Mhm.
and based on your risk tolerance, if you're someone that's aggressive, balanced, moderate, you can decide what type of portfolio you want your extra money to go into. So that would be an investment. The strategy that I spoke about beforehand is not an investment, that's more of a savings strategy. However, with a universal life, it is an investment because your money will be subjected to the ups and downs and volatility of the stock market, right? So that is an investment. So
Mhm.
these are for people who, are looking for somewhere to have their money grow tax free, similar to a TFSA. With a TFSA, you can put your money in, and any interest that you make is yours to keep. Same thing with universal life. You're able to invest within your universal life policy and get tax free growth.
Oh,
And major key as well, if you were to pass away, the death benefit, along with your investment portion, also pays out tax free to your beneficiaries.
oh, okay, that's good to know. And so, if it's paying out tax free, is there a contribution limit that we have in your life insurance policy?
Absolutely. So yeah, you can't just dump, the whole kit and caboodle into a universal life policy.
Yeah.
Definitely, Revenue Canada does have a cutoff point, and it
Uh,
is specific, of course, to your premiums and how much you're paying and whatnot. But
mhm.
the average person typically, you got to have a lot of money to reach that point. So I don't think it's something your audience necessarily has to worry about. But yes, there definitely is a cutoff that your advisor can let you know. But
Mhm.
for the average person that just wants to put in a couple extra $100 a month, there's no issues with that at all. And like I said,
Okay.
it's tax free growth. You can
Yeah.
take the money out whenever you want to. And yeah, it's a great alternative to a TFSA.
Okay, this is really good to know. So I guess it's like you can say you've maximized your TFSA, and now you have your RRSP as well, but you also have this life insurance policy, universal life insurance, where you
Yeah,
can also consider investing through that and getting tax benefits as well. Okay, so
exactly.
now that we know that we need to have a life insurance policy and everything like that, how do we actually get this life insurance policy? Are there different avenues that we can go to?
Yeah, absolutely. So, I mean, these days, I mean, I'm sure a lot of people look at things online. So, I'm pretty sure there's ways that you can apply for coverage, different types of coverage online. You can look at your current financial institution. You can look at, your local bank to see if they offer any type of coverage. Of course, the number one way that I would recommend would be, of course, to connect with a broker like myself, just because when you work with an insurance broker, the benefit is that we are contracted with multiple companies. I'm not contracted with just one company. That means that it's a better option for you because I can provide you with options, right?
Mhm.
And there's so many people that have unique situations, whether that be health, complications and whatnot. You want someone that can provide you with different options because where one company might say no, other companies might be an automatic yes, right?
Yeah.
So you want someone that kind of has a diversified mix of companies that they can offer you just so that
Mhm.
you can get the best rate. So getting a broker, I think, would be the number one way, but definitely you can look for, you can actually also contact insurance companies, I'm sure, directly as well to apply for coverage.
Perfect. Thank you so much, Nicole, for coming on my channel. I think this will be an amazing episode or video where we will educate a lot of people. Hopefully, they can get life insurance as soon as possible. And Nicole, I want to ask how, if they wanted to reach out to you to get to use your services, how could they contact you?
Yeah, I'd love to hear from your subscribers. They've all been really, amazing to connect with in the past. Definitely reach out to me on Instagram. My name is Advisor on the Go. I have tons of content there that you can take a look at to learn about the different types of coverage and why you should get life insurance. You can book a consultation, a free consultation, right from the link in my bio. You can also check out our company website at www.cpn, so Colin, Peter, and Nicole, financial.com, where you can also learn a little bit more about my company and book a meeting with myself or one of our advisors there as well.
Nice. So I will leave all of that information in the description box below just in case you missed it. It'll be easily accessible for you there. And if you do reach out to Nicole, just make sure you tell her that you found her from this video and that Reni sent to you. Thank you so much, Nicole, for being here. I appreciate it.
Of course, Reni, take care.
Thank you, everyone. Make sure to like this video. If you liked it, make sure to comment any questions that you have in addition below and subscribe to my channel because we'd love to see the family grow. Okay, I'll see you in the next video, everyone. Bye.